Alright people, I'm in July recording this video. Half of 2021 has gone by. It feels like it's gone really quick. I don't know about you guys, but for me, this first half of the year, flown by. Anyways, end of the month, you know what time it is. It is Trading 212 portfolio update time, but we're going for a bit of a different format today. So let's get right into it and I'll tell you all about it. Welcome to Millennials with Money. My name is Johnny and thank you for joining me for this video. Now, as I said, different format today. So because we're halfway through 2021, instead of doing a review of the month of June, we're going to do a review of the first half of this year. We're going to be comparing the portfolio at the end of December 2020 to where it is today. We're going to be looking at the capital gains, how much money is in each of the different pies that I've invested in, and how much money I've got in dividends. We'll also have a review of the allocation in terms of what new companies, what new ETFs I've added to each of the different pies, and we'll of course review what have been the main drivers in the portfolio performance to this year. And I wanted to take this approach to give you a glimpse into the power of investing, to give you a first look at what building wealth over the long term looks like. Now, when we say long term, 6 months, it's obviously not long term. We're investing over many, many years, and that's what I consider to be long term. But even at the 6 month point, compared to where these pies that I had in Trading 212, where my investments were 6 months ago compared to today, you already start to see how that can build up over time. So I wanted to give you a look at that today. And now let's get right into it and have a look at how the pies have done over the first half of the year. So let's start with the ETF Spine. Now this has been the most stable of the 4 pies that I have in Trading 212 because I'm tracking indices worldwide, I'm tracking a range of regions and even sectors. Even though there have been ups and downs, they've not been quite as high and as low as in some of the other pies that I have. The asset allocation in the pie has pretty much remained the same since the start. I started this pie in December, end of December I think it was, and the only ETF that I added to the pie since the start of December was the VanEck video games and esports ETF. So my allocation has remained pretty much stable. So you can see that the biggest asset allocations are in the developed regions of the world, so in the likes of the US, Japan, in tech stocks and the all-world Vanguard index. And then down below you can see, of course, I've got some allocations in emerging markets in the world as well. So at the start of this year, the value of the ETFs pie was 20 euros and 17 cents. I was up 17 cents, which is a 1.7% profit. Today, the value of the pie is 613 euros and 51 cents. And I've made a return of 32 euros and 63 cents, which is 5.72% return. Now you may remember at one point I mentioned that I'd increased the contributions to this pie from 10 euros a week to 25 euros a week. So that in part explains a large increase in the value of the pie. Nevertheless, it's really good to see that the pie is performing really well and that I have in fact made a profit yet today. And of course, by increasing my contributions to the pie, then the monetary value of the fluctuations will be greater as well. So even though this represents only a 5% increase year to date, the value is of course greater than had I left the contributions at 10 euros per week. And of course, so far I've received 88 cents in dividends, which have all been reinvested back into the pie as well, which is really good. And of course, over time, we can expect more and more dividends to come in as the amount invested increases and the holdings therefore increase. So I will have the right to more and more dividends, which will get increased. So all is looking well for the ETFs pie so far. Now we move on to the Euro stocks pie. Remember, this is composed completely of stocks that are listed on European Union country stock market exchanges, and we've also got a couple of companies from the UK in this pie as well. Those of you that have followed the stock market of course know that it's been up and down, a bit all over the place this year, right? Not to the same extent as the US markets, but Europe typically replicates to some extent the trends that are going on in the US. And of course, there's been a lot going on at a political level, not just in Europe, but also in the US, which has had an impact on Europe. There's also been the illness to take into account, the tightening and easing of restrictions over the course of the year, various different waves of the illness, and the impact that this has had on companies' ability to do business and investors' confidence in the market. Those dips in the stock market, of course, have presented opportunities to invest in companies at undervalue. So companies like BAE Systems, like Unilever, like Orange, Telefonica, Proximus, all companies that I've added this year because I believe they were undervalued and good stocks to add to the portfolio. And as I've added these companies, I've had to tweak my asset allocation to be able to accommodate all of them. And of course, we got to a point where I said, okay, not going to try and add any new companies because the pie is quite full right now, and I don't want to become over diversified. But if we just take a quick look at the allocation down here, you can see the biggest allocations are kind of in so consumer staples, technology, so essential products. I also wanted to get a good representation of tech in there, so with the likes of Sage, the likes of Thales. And I also wanted to take a bit of a risk on the travel sector. So you can see Accor Hotels, National Express and Aena, because of their potential for recovery should we come out of this health crisis on the front foot. Let's put it that way. So yeah, big potential for the travel stocks to recover as well. So that's why I increased the allocation there. Normally I would have kept that quite low, but decided to take a risk, and we'll see how it goes. So this pie at the start of this year had 79 euros and 53 cents invested in it. I was 49 cents down, which is 0.7%, and I'd received 23 cents in dividends. Today, the pie is worth 359 euros and 58 cents with a return of 13 euros and 94 cents, which is a 4% gain, and I've received 5 euros in dividends. So again, fantastic progress that the pie is making. You can see that this kind of backs up the point that I made about the contributions to the ETF pie. The percentage return is similar, so 4% versus 5%, but because I've been contributing less to the Euro Stocks pie, then the monetary value of that return is a bit less, so 13 euros, whereas 5% return and 32 euros in the ETFs pies we've just seen. Now the other two pies I have been trading 2-on-2, the Speculative Investing pie and the REIT pie, are both relatively new. The Speculative Investing pie I started it a few months ago, and the REIT pie just a month ago. So we obviously can't do a half-year comparison, but we can look at them over the time that they have existed, and of course we can assume that their starting value was 0. So let's get started with the Speculative Investing pie. Obviously, due to the nature of the companies in this pie, so they're growth-focused companies, they haven't been around as long as some of the companies in the Euro Stocks pie, for example, we can expect a bit more volatility, and volatility is what we have seen. Back in April this year, I think it was, there was a sell-off of tech stocks in the US. And as a result, the Nasdaq declined. I think the S&P declined a little bit as well. Innovative, all those kind of stocks, took a hit, and that's essentially what this pie was. So back in April, you remember this pie took quite a hit and was in the red. And of course, because I have Tesla in this pie, then of course, there's been all the news going on around Tesla regarding its production, regarding its Bitcoin holdings, and of course, Elon Musk's Twitter fingers. But my friends, I bring you good news this month. We are in fact in the green with this pie. Finally, we are in a profitable position with this pie. So the value of the pie is 135 euros and 73 cents. My return is 20 euros and 57 cents, which is a 17.86% return. Now, because of the risk that comes with investing in these companies, we can of course expect that bigger return than we would with stocks in the Euro Stocks pie or the ETFs and the ETFs pie, for example. But if you followed the series, the update series that I've been doing, then of course you'd have seen that during the difficult months that those losses have been quite big as well. So you just got to sit it out if you really believe in these companies, and over the long term, if those companies do as well as you believe, then you can get those higher returns. And if we look at the performance of the pie this month, you can see that DocuSign is the clear driver in this pie. It's really taken off. Tesla finally back in the green, but not quite where I would want it to be. But as I say, every month when I do these updates, you just gotta be patient. And by being patient, I've seen the pie recover. So by continuing to be patient over the long term, I believe that Tesla will continue to increase, and that both of these companies and the value of the pie, therefore, should go up even more over the long term. And then we've got the REIT pie, which is the newest pie. Last month was the first time I showed that to you guys, and I gave you, of course, a bit of the background behind it and why I invested in Merlin Properties, which is the only REIT that's in it right now. So in the space of a month, maybe a month and a half now that I think about it, the pie is worth 63 euros and 70 cents. A loss of 2%, 1 euros and 30 cents. So, it's early days. Too early to comment on it, but of course I would ideally like to diversify this pie a bit more, find some more REITs to add to it. I just Just haven't had the time to get around to that in June, but I do plan to do it. If you guys know of any REITs, or if there's any REITs that you really like that you think would be a good addition to this pie, then why not leave a comment and let me know, and I'll of course go and check them out when I have a moment. So looking at the big picture and taking all of these pies together, you can see that at the start of the year I had about 100 euros invested across the first two pies, so the ETF Spine and the Euro Stocks pie, and today I have over 1,000 euros invested across these four pies, with 80 euros of profits if you net them off, more or less. And I've of course received about 5 or 6 euros in dividends as well, which is really nice. So I've been investing for about 2.5 years now, and I started doing this Trading 212 series 8 months ago, so end of November, a couple months after I'd started making videos on YouTube. If you want to go back and check out any of the episodes in detail, I have been keeping them in a Trading 212 playlist, which I'll leave the link up here for you if you want to go and check out any of those episodes in more detail. And despite the short time that I've been contributing to these pies, remember 6 months is not a long time, given that as long-term investors we're looking in terms of years. In these 6 months, I feel like the stock market has kind of done a mini cycle that you would expect to see over the long term. So in those 6 months, we've seen the stock market go up a little bit. We've seen it dip right down because of a lot of the news that's come out, but it's also come back up and it's recovered, as you've seen from the final positions that I've shared to you just before. The point is, if these are the results that I've gotten in 6-8 months, imagine how it's going to look at the end of this year, at the end of next year, in 5 years, in 10 years. Investing is a game of patience. It's not a get-rich-quick scheme as you may think it is, as a lot of scammers, a lot of people with bad intentions on the internet make it out to be. Investing is a long-term game. You can see I've made profits, but they're not life-changing profits. The goal is to build wealth slowly, to build passive income, and to reinvest and grow capital over the long term. And that is what I'm achieving right now on Trading 212. And another thing that I think I've been able to highlight is that you don't need a lot of money to get started investing in the stock market. My weekly contributions in monthly terms come to between 200 to 300 euros. 200 euros when I had the first two pies, and up to 300 when I added more pies and when I increased the contributions to the ETFs pie. And yes, 1,000 euros that I have today invested across those pies, like, it looks like a lot, but that took 8 months. As I said, these have been going for 8 months, so that took 8 months to get to that 1,000 euros that I have today. And you don't even have to contribute as much as I've done. You can invest maybe 100 euros a month, 50 euros a month, if that's within your financial means. Heck, like Trading 212, it allows you to invest from €1 or £1 or $1, wherever you are, whatever your currency is. You don't have to invest as much as I've done. Of course, the more you invest, the more you'll see your capital grow, your money grow, your returns, your dividends multiplied. But do it within your financial means. The point I'm trying to make is you don't need a lot of money, and getting started is the important thing. As a matter of fact, I'm actually going to be contributing less money to these pies going forward, because after reviewing my savings and investing goals, where I am today and where I want to be, I've actually realized I need to make some changes, and Trading 212, therefore, I need to cut back on how much I'm investing in that. That said, even though I'm contributing less money and the pies are growing at a slower rate, these updates aren't going anywhere. They're still going to be here every month. I'm going to be giving you guys updates, and I'm going to be giving you the news and explanations of what's going on in the world of investing. So make sure you stay tuned for the July update, and leave a comment and let me know how your portfolio's done over the first half of the year. I want to know. I'm interested. I want to find out. Now check out these videos if you enjoyed this one, and if you're not yet subscribed and you want to see more content like this, then make sure you hit the subscribe button with the notification bell so you don't miss a single update. I'll see you on the next one, and let's get this money.